Good morning, good afternoon. Hello, everyone. Yeah, this side Chartered Accountant Ashwini Bhanushali, your mentor, your tutor for APM. I just need to understand whether we are live or not. Just give me a minute, just a couple of minutes, and yeah, we can go ahead with the flow. So, yes, students, without any further delay, so we have already covered up. If you can check on the YouTube series, the first chapter we have already covered up. That is Introduction to Strategic Management, in which we were left with certain models, right? So, yeah, without any further delay, today we'll continue with certain models which are pending and which are again very important, and we will go ahead with the budgeting and control. Okay. So, yes, students, without any further delay, let's just start with the first topic, which was certain models. And yeah, students, from the examination perspective, also, we can take up this topic as a bit important. Important means it's important to understand for first. Okay, so what are the different types of models that we are going to understand? If I talk to you about guys the models in our syllabus, I know most of the students knows this model very well prior to what I'm explaining. But students, yeah, this becomes important, equally important. Okay. So models that we are going to understand is first is SWOT analysis. Yeah, SWOT analysis. Then we have pestle analysis. Then if I say about, we have Porter's two things. Yeah, generic strategy. And over here we have guys Porter's five forces model. Yeah, and last we have basically BCG matrix. So students, I really want you guys to not get confused between Porter's generic strategy and five forces model. So yeah, without any further delay, let's just start with the models. And yeah, with the short span, we are going to understand it to the bestest possible way. Okay. So over here, we are going to understand these models which are useful in checking up how good the performance of the company is. Okay, in the performance management process. Okay. So over here, the management system has thought up to come up ahead with certain managements, okay, yeah, with certain models. Like how can they analyze what the company is, how the company wants to go ahead. So for that, the company needs to know, even if I want to know that how good I am, so obviously I need to know what good I am. What are the things which I'm not good at? What are the things I can be more good at? What are the things I feel like, no, it's very difficult for me to achieve this? Until unless I don't know myself, I cannot go ahead. Obviously, this is same for your entity and for your business purpose also. So for that, guys, we have certain models, and yeah, without any further delay, let's start with the first model, which is known as SWOT analysis. So yeah, I know everybody knows this word, which is a SWOT. So what is SWOT analysis and why is it helpful? So this is the topic which I have already covered it, I know, in the previous class, but it's just a revisionary part. So I thought of let's take it, yeah. So when I say about this SWOT analysis, SWOT, it is basically strength, weakness, opportunity, and threats, in which students we will understand about the entity. What is the entity's strength? What is the entity's weaknesses? What are the opportunities which an entity can get, and what are the threats which the entity does not want? For example, if I say about iPhone, okay, if you say about iPhone, I know its strength is what? The unique feature, the brand recognition, the way the people love it. Yeah, it is its strength. So obviously, if company is having strength, definitely they'll be having certain weaknesses also. Yeah, the biggest weakness is their price, their high costs. So not all the people can purchase it, cannot afford it. But that is something which is normal. If I'm not giving you any example of iPhone or nothing like that. What is strength? For example, I can understand what is the company good at, what I can handle it easily. For example, I got to know, okay, for me, solving practicals is my strength, but theoretically is my weaknesses. So I can analyze by my own. So how do I get it? I understand it by my own. So it is an internal factor of the company, yeah, of any organization. Then, for example, if I just say, if government has given any reliefs, okay, I got to know that this is my opportunity. For example, it's iPhone. People got to know, the company got to know that users want the Type-C charger. So yes, this is an opportunity. User wants reduced weight of the iPhone. Okay, that's an opportunity. We can go ahead. Users want a better quality camera. It's an opportunity. So if I can use that opportunity to be at a number one position, it is my opportunity which I can get it from the external market. Yeah, students. So when it is strength and weakness, it is internal. When it is opportunities and threats, these are the external factors. So what is threats? For example, my external fear, my competitors. Yeah. Prices increased by the supplier. Oh my God. For me, if I'm producing something, I required raw materials. The prices of the raw materials are more, I cannot handle it. Like I don't have other option rather than increasing the price. Yes, it is my threat. Or like the customers don't like my product. They may shift to some other also, other supplier. So that's a threat. So students, this SWOT analysis is being learned from the concept like if I want to engage in some product, maybe in the future or maybe upcoming thing. So what are the things I should go ahead with? For example, I'm planning to have a growth, let's say by acquiring a company, let's say telecom industry. But what if I don't know anything about ABCD of the telecom? That is not my opportunity. It is a threat. Even if I purchased it and even if I'm not good at doing so, it is gone. So analyze something. Strengthen your strength more to grab the opportunity. Strengthen your strength so much that your threats are also now as a situation that they also will be the opportunity, and minimize your weakness such that that does not affect it to be a threatful situation. Okay. So yeah, we'll just read it for once. What's given up next? Yeah. So a critical observation and assessment of the organization's strengths and weaknesses are identified from where? So I told you the strength and weaknesses. The strengths and weaknesses are basically internal, whereas the opportunities and threats are external, which we have to consider it. So when it is strengths, means the things which I can do it very easily. Weaknesses are something which is very difficult for me to handle it. I'm lagging the technology about that. Opportunities means, yeah, ma'am, obviously there is something in the market which I can grab it, that I can change it, I can exploit it and get the advantage out of it. And threats are something which I feel it's better I'll defend it. I don't want to indulge in it. Otherwise, my company is going to go down. So that is your SWOT analysis. So how we can go ahead? By identifying company's strength and weaknesses, the management can focus where to go, where the company is good at. Where should I go? What are the things which I should avoid it because I don't have the strength over there? About the opportunities, means what are the opportunities the company gets? Yeah. What are the things the company should go ahead with? Along with that, the company gets to know a lot of, like, for example, if it is threats. So threat represents something which is outside the company. For example, if there is any government new policies, changes in attitude, etc., etc. Maybe it is showing my weaknesses. And if I am weak in that position, and if again that thing happened, oh, that is my threat, right? So try to incalculate what we should see. This line is very important. Huh? Efforts should be made to convert your weaknesses or threats into strengths and opportunities so in the long run you will sustain. Yeah. So I want to minimize my weakness so much that even that becomes my strength. How can I minimize my weakness of theory? Let's say by reading it, by understanding the concepts, right? By making some like the words which are more interesting. So yeah, I can do that way. So yeah, students, this is just a summary, which is very, very easy. If you just understand this, it's enough. So when it is SWOT analysis, guys, its internal factors are strengths and weakness, external are opportunities and threats. When it's an internal stuff, guys, when it's an internal stuff, we need to know organization, what the organization is good at. If it's good at, it's a strength. What it's bad at, it's its weakness. Are the resources in short supply? Oh my God, I have limited amount of resources. I have limited hours. I have limited material. It's my weakness. Maybe I'll be not in the position to complete the order on time. So it's a weakness. What are the resources excellent? Oh, were the resources excellent? Wow, it's excellent. It's strength. Analyzing the strengths and weaknesses helps me to actually go ahead and externally find out the opportunities and threats. So what are opportunities? For example, how will the economic change impact the organization? I got to know that in the market there is a huge recession. People will not buy my things. Maybe that is negative thing. How can the organization make use of the technology? Let's say I am in the underdeveloped country where people used to take 10 years from computer to laptop also they want to switch. They used to take 10 years. And if I'm implementing robot there, Hari Baba, people will not accept. But if you're in the high-tech place and you are implementing all those technologies, maybe that will be your opportunity. So guys, we have to analyze in both the phases, considering what? Considering the external environment. That is very important, right? Okay. Can new entrants enter the market? Is it easily available? Can there be any sort of barriers are there? If there are no barriers, people can come and go anyways. That's easy. That's easy. That's literally easy. So it's for me a threat because a lot of competitors will be there. And vice versa. And can a powerful customer dictate the terms? Means it is a buyer market or a seller market. If there are a lot of buyers and limited suppliers, then it is not like if I'm saying you limited suppliers means maybe one or two, then supplier can price whatever they want. But let's say there are a lot of suppliers, that means buyers are having a lot of options wherever they want, wherever they get a reduced price, a better quality, they may switch. So yes, all these factors needs to be considered before we enter into another product. Okay, so this was the first model that we successfully completed. Up next, guys, we have pestle model, pestle analysis. If I'm saying you guys a pestle analysis, it is going to emphasize you on the external and the macro environment. Okay, it's the pestle analysis means the external factor, that is the pest. There is a macro environment which emphasizes pest means PEST, EL is common. So pest says, for example, I need to know, for example, if I want to run any of the business, okay, any of the business I want to develop. So what it is important, I always have to see like the external analysis, like even if you go to some like there was a show, Shark, like business investors, they'll ask, okay, tell me, first of all, you have to understand the market first. And market first means what market? It's the macro environment. I need to understand the environment, which is a primary thing. If I don't understand the environment, I'll maybe developing something which is going to ruin the stuff. So yes, that is very, very important to understand the environment first. Like how, for example, if I'm setting up a factory, okay, which is producing, let's say, a lot of plastic stuff. Oh, I think like, yeah, I'm getting benefits, I'm getting profits. But we know in the country, plastic is banned. So what am I doing it? I am impacting the rules and regulations of the environment also, which means in your near future, you will be penalized. The company will be out of the scope. For example, if I'm talking to you about the legal stuff, so when you see the pestle now, I'll just read out the words PEST, E and L is applicable to everyone. So E is environmental. So you have to understand what things are beneficial for your environmental natural resources. Are you utilizing the sustainable resources? Are you reusing it? Or are you manipulating it? Or are you degrading it? And last, you have to consider always the legal terms, always the legal factors. Legal factors means, for example, if I want to set up anything and I know, okay, Papa, for this I require a proper like the permission, or maybe I require a license. And if to run that, if I'm not accepting the license, if I'm not taking up the license, it's very bad. Means it is going to impact each and every stuff. Okay, so we have to consider that also. Up next, where is this P? That is the first one, P. There is nothing other than the political factors. We have to consider the political stuff, political, then economic, social, and the technological. So we hear what it is, guys. If I read it slowly, I want to compare, let's say, when comparing the performances of two or more organizations which operates in different market, a simple comparison is not valid. They have to go ahead with checking up the two environments in the market. So what are they? It's the pestle analysis. How? First, I'm not reading it. I have already read it. When it is the first political factors means if I'm engaging into some company where I feel that the market is not stable, yeah, the environment is not stable. That means the government today, if they are putting up the percentage of tax rates, tomorrow they are just like exempting it. Day after tomorrow, they are just putting it up more. Hare Baba, is it stable? If no, if the government policies are not stable, the tax rates are not stable, the import duty is super high. Some government don't want the foreign direct investment to come in India. Some don't want it should go. That means what, guys? That means what? If things are not stable, my company will also be not in the position to think themselves from that view. So we have to consider all those stuff also. So yes, that shows how good the political impact is. So the political climate can have significant influence on the performances of the business. Yeah. So like for example, some taxation policies, stability of the government, foreign trade regulations, taxation, employment laws, monopoly laws, and other environmental protection laws also. Then we have PE, that is economic. If I say I am in the market, if I am in the business, and let's say I'm supplying or I'm manufacturing, let's say fashionable goods, fashionable clothes. Okay, in the market when there is a recession, people don't have so much of money to even have food. Yeah, then my fashion industry is not going to work. So that also is important. Means you have to consider what you have to consider. I have to consider the inflation rate, deflation. I have to understand what other changes happening in the economy. That is a level of GDP will clearly influence the demand of any products and services. For example, organization needs to consider the impact of the government actions also. For example, government might adjust its policies to influence the demand. For example, the tax rates and all. Obviously, for example, there could be an increase and decrease in what, guys? Interest rate, yeah, inflation, boom, recession, of unemployment, and the business cycle. Yeah, that is what is known as PES. S is society can also impact it, social. We need to be very social. Why? See, if I'm doing any stuff which is against the society, people will not accept. And if people will not accept, the company cannot grow in long run. Over here, I have to respect the culture which has been predicted, okay, which has been analyzed. So demographical change, for example, increasing number of pensioners, demand for package holidays. So that can work. Changing the attitude of this society, like we know today, because of the people having keto diet, they know today tobacco is injurious. So people are going towards green product. I got to know the society is getting upgraded. In COVID period, we know that society was like green tea, we want this, we want that. Arre Baba, okay. So considering that, grabbing an opportunity and considering the social factors, if I go ahead, I'll be super good. Otherwise, maybe not. Okay. Then changes in the population growth rate. This is also very important. For example, many people who are aging more, people who are actually paying taxes, pay taxes, people who pay taxes, maybe 10 percentage, people enjoying the pensions benefit, let's say 50 percentage. So just imagine how burden a person is having for taxes, how tax burden is there. So even that can also impact. Then we have a technological factor that says if you are developing, let's say, electric car in a very underdeveloped underdeveloped country where today they don't even purchase normal car, they have cycles, it will not work. But if in the high-tech country, if you are implementing, it's okay, fine. So technological factors shows like increased automation, communication method, internet, extranet, everything. Then the common thing are environment plus legal. So what is environment? Yeah, we have to understand that whatever decisions about the company I am going to take, I cannot ignore this stuff regarding any environmental changes. No matter it is because of drought, volcanic eruption, no matter COVID and all. So consider all those stuffs and then go ahead. Otherwise, you will not be able to achieve all those stuff also. Last, you cannot abide by the rules of regulations, by the law. If I did any sort of works which are against my law, my company will be stopped with a lot of fines, penalties, prostitutions, and maybe you might be in the bars or whatever the stuff can be. All the possible negativity can come up. Okay. So yes, students, with these we have completed the second module also, and I hope you are getting it. So till here we have already covered it in the first session. Yeah. So we'll just continue it further. So yeah, let's continue with the further topic, which is again very, very important. Okay. Which if I can say it obviously is being seen in a lot of stuff, and we also know that yeah we are very, very, very sure about these topics. Which we normally tell it as a Porter's five forces model. So what is the meaning of Porter's five forces model? So yeah, students, there's a Porter, the Porter, the one who has taken up a lot of efforts in formulating a lot of forces. Okay. So if I'm talking to you about forces, what's the meaning of forces? Means when the Porter thinks of, or when a person, or it's about the individual. Okay, it's about the individual. If an individual person wants to, let's say, enter into new business. Okay, new business. For example, if I also want to enter into a new business, okay, what are the things which I have to consider it before I enter into new business? So normally what will people think, acha, if I want to enter into new business, let's say paper industry. So what I'll say, acha, in the paper industry, now there are a lot of competitors. Yeah. So much of capital investment is not required. We have a lot of suppliers, we have a lot of buyers. Yeah. And a lot of competitors are also there. Yeah. So these are certain stuff which I believe it. Maybe if I want to enter into a new business of, let's say, arms and ammunitions, so I'll say, oh my God, there is a huge capital investments. There are not so much of suppliers. There are not so much of buyers. Maybe there are not so much of competitors. So what should we go ahead with? Yes. So Potter has decided the five forces model, which Potter says that if out of this five force, if any of the force is more, if any of the force is more, the company should not feel like that it is more better. Means more the forces are, lesser the profits. Means what? We'll go it very slowly. The first force here, the Potter says that is threat of new entrant. That is threats of new entrant. If you feel that, let's say I'm having a super threat. Like I know, for example, if I'm in the paper industry, so I know people can easily come, people can easily go. So there is very easy entry for new people also to come and start this business. If new people will come and start the business, obviously, ma'am, the competition will increase. You will not be able to achieve whatever price you want to set up to get the benefits. Agreed? Yeah. Maybe there are not so much of barriers that okay, this much price you have to write, like keep it, or you can enter. There is a saying, once you enter in the industry, you cannot go out of the industry. It's not that exit and entry barriers. If I feel so, that means I have to analyze. If the threat of new entrant is very high, a lot of people can come. It's a negative factor. Yeah. So maybe if I to enter in such a market which is already saturated, right? Why not to go ahead with the monopoly stuff? Yes. Second, second, we have a threat of lot of substitute. What is the threat of substitute, guys? For example, if I want to enter into a business, let's say in the tea business, tea, coffee. But I know if I am not good in doing tea business, there are a lot of other substitute. If people didn't like my tea, definitely they'll switch towards coffee. That means there is a threat of substitute. If more the substitute are there, my chances to develop a new business is going to fail. If I am not working well, means there is a huge competition in that also. So yes, students, if there is a threat of new entrant, if there is a threat of new substitute, a lot of substitute, it's a negative force. If I'm having a huge amount of competition, yeah, so there are a hell lot of competitors. Then the competitive rivalry is also not good. Because if I'm bad at something, definitely my competitor will gain that advantage and will come back. Yeah, maybe the people will switch towards them. It's also a negative force. Then we have bargaining power of supplier and customer. We have bargaining power of supplier and customers. So what's that? Bargaining power of supplier or customer means, when I go to the shop, I go to the shop, I mostly do the street shopping. So what happened in the street shopping? You go to the shop or like the hawker, so you tell them, okay, I want this top, for example, the shirt. So he told me 500 rupees. I told him no, 250 rupees. He said, okay, ma'am, what are you saying, ma'am? Maximum we can afford you, like we can give you at 400 rupees. I said, no, I'll not be purchasing anything lesser than 250. So I just turned around. He told, okay, ma'am, you can take it at 300. I just ran one step ahead. I just went it off. He told, okay, ma'am, you purchase at 250. It's okay. That means what? There are a lot of suppliers in the market. If he didn't give me 250, maybe I can go to some other and I can buy. That means that is the meaning of bargaining power of supplier. That means, sorry, bargaining power of customer means the customer is having a power that whatever price they want, they can purchase it at that price. If there are huge customers, but like if I know, and huge supplier, so buyer has a huge amount of choice. Yeah. But what if I say you? But what if I say you? I went to the place to buy iPhone. I told them, they told me 1 lakh. I told no, please give me at 80. What he'll say? Yeah, ma'am, come here. 90 maybe we'll give. He'll say, ma'am, if you want to purchase at 1 lakh, you purchase, otherwise you may go. What's that? He is having the power because there are not so many competitors. Agreed? Yeah. So that is known as the bargaining power of supplier when there are not so much of supplier. It's the monopoly of the supplier or maybe very less supplier. Yeah. So these things can happen. So Porter considered that if all these factors are there, like the threat of new entrant and all, I'm just closing it all stuff. Yeah, when there are so much of things in the market, like for example, Porter feels that if there are a lot of new entrant, means a lot of new entrants are many, like anyone can come, then it's not good, not good. If there are lots of substitute of my product, it's not good to enter in that market. If there are a lot of competitors, yeah, it's better not to enter that market. If the supplier is having the bargaining power, if already the supplier are very strict and I'm entering into that, it's not good. If the bargaining power of the customer is more, even that is not a better place. So if I feel like majority forces for my company, for majority factors, or majority forces for me are negative like that way, so I should not enter into that type of market only. Okay. So without any further delay, we'll just read it because I assume that you have completed the course prior. It's not for you the first time when we are reading this APM stuff. Okay. Yeah. So what is Introduction to Strategic Management Accounting? Porter's five forces model focuses on the competitive nature of the industry or sector, yeah, in which the customer and the supplier is having a better position. That is the strength of the forces. Yeah, just imagine. More the powerful forces are, less the profits the company can achieve if they enter into that stuff of market. Now, this is the main key liner. Okay, so please just remember that. Yeah? The strength of the forces influences the profit of the potential industry. Stronger the force, lower the profits potential. Easy? Yes. First, if you read it, yeah, guys, we need to understand what is the threat of new entrant. Okay, first, what's the threat of new entrant? New entrant. If I feel like it's not easy to enter the market, it's not easy to start the business, that means there are a lot of barriers. Then it's good. So there are no so much of competitors. Okay, so that is the first meaning, which says that if an industry is experiencing high returns, new entrant will always be attracted. If you know that today the telecom industry is getting ahead, the fashion industry is going ahead, so I'll feel, yeah, more the profits, people will like to invest, like people will also want to start that business only, right? But is it so easy? How easy it is to start that factors? For example, if I think like I want to enter the paper industry, yeah, for that they have told, ki ma'am, you require 4 lakhs capital investment. And everybody can start it. But what if I say, ma'am, I want to start the arms and ammunitions thing. For that I required 4 CRs investments. Baba, not everybody has the capacity, isn't it? So the capital requirement is the first plan. That is, they vary. The industries vary according to technology and scales. Those who are very capital intensive, capital, like which requires a huge R&D cost and all stuff. So we are good with it because there will be no so much of competitors for sure. Yeah, because there will be not so much of competitors in that industry where a huge amount of R&D expenditure is there. Or if I can say you, yeah, even this happens. of economies of scale. Means it is very difficult for new competitors to break the market. Why? For example, if there is some ongoing industry. So let's say they are having some expenditure of, let's say, 5 lakhs, and in a year they are in the position to manufacture easily 2 lakh units. So this is a cost and this is the units. I can divide it and get per units cost. But what if you are entering new? Maybe the cost is 5 lakhs only for the rent. Let's say the rent is that much only. And if I say you are able to only create 50k, 50,000 units. Your per unit will be less. Your per unit cost will be more. Because why? We have not achieved the economies of scale. Means we are not able to maximize our production till now. So yes, that also can be a situation. Then we have a threat of new entrants in the distribution channels. We need to have a proper channel where we can distribute our technology, things, products and all. So that it is nowhere a situation like, for example, I go to buy a car and they say, okay, ma'am, it is tell you have to wait for like 1 month because our dealers and all will take up time. Maybe you will not wait for 1 month. You want to switch to some other, like the other car thing. So yeah, that is also a hindrance. Okay. Maybe government's rules and regulations can also be a stuff. If a huge restrictions are there, huge, high restrictions. So very less competitors will be there. If no restrictions, everybody wants to enter into the market, is it? Yeah. Now, supplier and customers loyalty also. It also depends on that. It also depends upon how good you want to be. Means if the company wants to be very different means how differential your product should be. Yeah, your services should be that you get whatever premium amount you can charge. So it also depends on that. Second, the forces are power of buyers means bargaining power of buyers. For example, I give you the same example, just consider that. If the buyer has a opportunity, whatever price he wants, he can purchase on that. Means who is having the power? Yeah, the buyer is having the power. That means if I'm telling you, if the buyer is having the power, maybe the supplier cannot charge whatever they want, right? Maybe the company can also run in losses for some time, yeah, for some time maybe. So here, where buyers are very powerful, they can change, they can accelerate or influence on the market. For example, they can demand whatever the favorable prices they feel for themselves, which in result reduces the company's profit, right? So what are the factors? So what are the things which we have to consider more? So this line is very important. I always tell my students that like the number of large customers in the market compared to the number of suppliers. Let's say I'm having some suppliers but a lot of buyers, so maybe they can be challenging as so, or a small number of large customers, small number but big customers are also having the power. Okay, then we know that if I'm purchasing from this supplier, I'll very rarely go to purchase through some other supplier. Why? Cost of switching between supplier is difficult. Along with that, I should have the trust issues, like I may have, I'm already having the like, a good relation with the supplier, so I may not end up going to some other party. So even that could be a scenario. Then the buyers have an opportunity of backward integration also. That is buying the supplier, buying the competitor of the supplier. Means, for example, I'm in the manufacturing of uh, plastic bottles. Okay, plastic bottles. For that, what I take? I purchase plastic granules. Okay, so if I want to purchase the plastic granules, I would want one supplier. Let's say I am the buyer of what? Buyer of this plastic granules. And if I'm having so much of ability, I can purchase the supplier itself. So I have a power to tell them, catch what price you have to purchase, or maybe I can purchase or I can join hands with the competitor of my supplier so that we both can be mutually benefited. So going back is known as backward integration. Yes. But when it is power of supplier, means the supplier is having huge amount of like authority. Like the supplier can decide whatever price he wants to supply. Supplier can decide the cost of switching and all. So means the supplier is at a good position. For example, COVID vaccines, yeah. COVID vaccines, there was certain supplier who were having the formula and everything, like the remdesivir and all. So they can dictate whatever price they want. Yeah, they can have an ability or opportunity of forward integration. Yeah, means they can go ahead like that way. So similar to the power of buyers, where the suppliers exert or influences the market, like for example, a large number of customers are there, but very less suppliers. Like out of 100 crore population, only 1 lakh people had that remdesivir. Yeah, so very less suppliers, but a huge amount of people. Yeah, customers. So cost of switching suppliers is difficult. Forward integration can be done, and the customers are fragmented, so they have little bargaining power. See, I was in the need of the medicine, so I will not bargain it because it is urge, so cannot do so. Okay. Then students, we have another concept which is known as threat of substitute. For example, if I go to the shopping mall, yeah, this happens. Yeah, this happened with me also. Like I went to the superstore, general superstore. I thought like, let me purchase Maggie, let me purchase biscuits, let me purchase rice also from there. I went there. I got to know whatever I'm ordering, they don't have only. Whatever I order, they say, "Okay, ma'am, today it's not that tomorrow it will come." Arey, Baba, I'll be irritated. I'll think that, Baba, you don't have the availability. That relates to availability. If you don't have the availability, I may go to some other shop. I will not wait for 2 days or 5 days, maybe. I can go to the other shop and I may be loyal for for the other shop. Why? I'll have a presumption in my mind. Like whenever I go to buy from the shop, they don't have only. So this may happen. Okay. This relates to availability of alternative for an industry's supply goods and services. It is different from the competitive rivalry as it relates to substitute, not the same product. Maybe it's a substitute. For example, the threat of substitute is where hire more when there is product to product or service to service substitution, or I can say for better quality or for generic substitution also. Yeah. Now, last topic that we have are basically the competitive rivalry. For example, I am getting some same goods at a cheaper price. I'll go there. I'll go there definitely. Why? Because I want the competitive advantage, isn't it? So this relates to the behavior of other competitors also. Companies fighting, okay, for the customer can be a situation. Like it can be the number of competitors, the sizes, to sustain. Then how is the market which is growing ahead? Maybe that could be the reason. Yeah, differentiation of product and the exit barrier can also be the situation. Then guys, we have over here, certain benefits and disadvantages are there for both. Now students, we have Porter's generic strategy. So up now we have understood Porter's 5 forces model. There was a forces which were, if more, it's negative. If the forces are not so much, it's better. So what is Porter's generic, normal, generic strategy? If I talk to you about generic strategy, it is divided into 2 parts. Means first is cost leadership and another one is product differentiation. Okay, what's the meaning of that, guys? Means when you want to be at a position which is superb, means I want to apply a strategy. Means guys, just try to understand. If I want to be the top company, if I want to be renowned, either I need to make a product which is super different, or either I have to reduce the prices so that the competitors are out. What like Geo did, yeah. Initially, people know like we were paying 200 rupees for just like 2 or 5 GB for per month, yeah, and we were utilizing it like madly, so slow. Just a minute. Oh yeah. Yeah, so students, when it is a generic strategy means like Geo used to do, initially they were giving the internet for so free that the people were feeling like, oh my god, so super. Yeah. Then they even launched it at a very reduced price, such that even so many other telecom industry competitors were there, even they were not in the position to match the cost. Agreed? So be the cost leader. Either you can be the product differentiation, either you can be the cost leadership. Means either you can be a cost leader. Means your cost of the product should be so less, the other people who are the competitors are out from the competition only. Yeah. So this is known as focus on the cost much. Focus on the cost much. So here I'll focus on cost focus. Or like Geo, like DMart, you can go ahead, or like Indigo Airlines, where it is product differentiation, guys. Make your product so different, like the other competitors are out only. Means, like if I'm talking to you about the phones, we know, my God, iPhone. It's not in the position that I can compare Vivo, Oppo, etc. etc. No phone are in the position to even like compare it with iPhone. So make your product such a different that means the quality of the product. Oh my God, wow. Then the quality should be such that no other phone can match it. Maybe the quality is more, and the people who are paying the money can also be good. Like the premium pricing can also be there. Means the people who are very price sensitive customer, means who are very much influenced with the price, maybe they'll not purchase, but it's okay, we are totally okay with it, because what Porter thought was to have a different product only, and that is known as a product differentiation. So if I just read it, it's basically Porter's strategy to analyze between either do you have to be a cost leader, or the differentiation means cost leader means make your cost, be a cost producer, which is the lowest. So your selling price will be very low, you will be at the number one position. Or make your products so unique from your competitors that the people will be willing to pay a higher or the premium prices for your products. Yeah. So offering the prices after understanding the generic strategy, the competitive scope has came up where we have to analyze the broader scope from like which area to go ahead, and narrow scope means which products to be given up that way. If I want to be a cost leadership, okay, if I want to be like a geo, what things I have to consider? Students, it's very important. If I want to reduce my cost very down, so will it be fine if I produce very less number of units? Ma'am, no. If your number of units are more, your cost per unit has been segregated. So first thing, you have to have up a economic of scales. So a lot of number of production should be there. That means, do you need, ma'am, the R&D cost? No, no, no. It's like repetitive work. Like one person knows that he is going to do that work, that work, that work. So no more skilled people and all. I don't want. I don't want only. It's normal people who are happy to do the repetitive work will work well. It's not use. It's not like the importance to have a super strategy. No, no, no. It's like we use the latest technology. It's fine. It helps in understanding the learning curve, improve the productivity, minimizes the overcost by, yeah, by like dividing it with the number of units, by dividing it with lots of number of units, and last, getting a favorable sources of supply. But when it is, guys, the differentiation thing, no, you cannot make it a bulk of production. No, 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 no. You need to be a very firm product. Your characteristics needs to be very competitive. Along with that, it's not just competitive, guys, it needs to be unique, it needs to be improved, it needs to be improved, it should be something like different, for which you can have a super quality design price. Yeah, so you can go ahead with that also. So here now Porter has assumed that if you want to be successful, you have to choose one. Either you want to put the price which is the lowest, or you want to implement a product, you want to set up a product which is superb, like others are not in the position to get it compared with. So yes, this is what we have learned it. Now, I'm going ahead with the last point. Yeah, it's on the same, which is known as BCG matrix. Okay, so what's the meaning of BCG matrix? So over here, students get confused a lot, and I don't want you to get confused. In your examination, you will be getting some four products or some four strategies in the four different quadrants. So you have to analyze in the four quadrants. Okay, which is the strategy which we are going to book it. Okay. So basically, BCG matrix, it's a portfolio matrix, which is helping us to take the long-term decision, and that to which decision, the strategic planning as to which business is going to grow more and what are the products portfolio. Means you'll not be having only one product, maybe more than two, three, four. So yeah, you have to analyze it. For example, guys, I'll not be going into more theory like for now. Just read it for once. What if I say you, yeah, what if I say you, okay, from the first, it's known as market growth rate and relative market share. Okay, let's see if I'm telling you the market's growth rate is superb. Means market's growth rate is superb. Let's say, for example, The market today is growing superbly in which industry? Let's say like mobile industry. Can I take mobile industry as example? Wait, I'll not do one thing. Yeah, okay. Let's say mobile industry. I feel like in mobile industry, the growth in the market is superb. Let's say so high growth. And my share of that growth means I am actually the person who sells iPhone. Even my growth is superb. So what it is, your company is touching the market situation means as in when the market is also growing, even I am growing. Even I am growing equivalent. That means what? It's good. It's good. So you are acting like what? Market growth means the normal market, the normal market. And my growth means relative market share means my company is doing also good. That is, you are acting like a star, high and high. Means your market is also good. You are also very good. So your company is acting as a star. But what if I say you, yeah, I'll just, now I think like you understood it. I'll just mark it. Okay. Over here now, guys, just try to please understand it. Over here, we have relative market share. Means what is my market share and what is the growth of market. Let's say if I'm telling you, yeah, over here, over here, I'm talking to you about, let's say, iPhone. Yeah, iPhone. I know the market is also growing very good and I am also growing very good. That means both of them are at a good position. So my company is acting like a star. It is going to shine where I can invest more my shares and get more profits, right? But what if I say you, I am in the radio industry. Radio, my radio. Is there any growth of the market? Are market? Nobody purchased, no growth. But still I am having share. Oh my God. Still I am having share. No. Let's say if I also don't have shares. If I also don't have so much of shares. If I also don't have so much of shares. But still I have something in my radio. So if I am still in the radio business, people will say, ma'am, you are like a dog. Please go out of the market. It's like a dog. Means, it's like a dog. Means what, guys? Over here, the market growth is low here and my share is also low, so everything is low, so we are like a dog over here. Everything is low, everything is low. So it's better now, like whatever money or whatever stuff you have like invested in the radio, whatever investments you have blocked it, please remove it. Please remove it. It's of no use. Nowhere in the future there will be any growth, so please remove that. But what if I say you, in the electronic vehicles today, oh wow, market is growing good, huh? But I am not so good. So can I reverse my position? Can I try to be good? Yeah, try to be good. I try to be good. Like it's something like the question mark, a problem child. Means the market is growing good. Means the people are liking electronic vehicles today. So EVs. So even if I invest my money in the electronic vehicles, I'll be like a question mark. It's a good situation. So I can grow ahead. Okay. But if I say you like the LED TVs, ma'am, LED TVs now nobody sees. But I have a huge share in LED TV, but market is not growing. So it's better to remove money from here. It's like I am acting like a cash cow. So they have told, ma'am, if possible, you remove money from here and invest it in this part and be like a question mark. Be like a question mark. If you also have a good share later in future, if you have a good share, you will achieve the position of star. You will achieve the position of star. Getting it? I'm going ahead. I'll explain you again. Please understand it. For first, we'll understand it. Okay, I'll just explain you again the first part. First, if you are in the iPhone situation, yeah, my market is iPhone. Like I am also good in the market. Everything is going good. It's like a star. Means I am working very well. If I am in the radio business, but my radios are also not working, I am having very less investment in radio and market also gone. So my business is like dog. It will not even sustain. Okay. If I am engaged in the electronic vehicle where I have not invested so much, it's just a little bit like 20% or 10%. But now if I grow to 80%, if I grow, I'll be growing from, I'll grow from here and everything, both the things will be then positive, then I will be like a star. But what if now it's in the LED TV? Nobody purchase it, but I have a huge stake. They'll tell you, please remove money from here, de-invest and invest in this fund and invest in the electronic vehicle so that future you will be a star. So yes, this is what is being explained. So where my share is less in which the electronic vehicle, my share is less, but market is good. Market is good. If I invest more money here, even I'll be good, and in future I'll be like a star, right? But what if I say you, yeah, over here in LED TV, if you still keep money here only, or maybe market is bad, my share is also bad, so soon you'll be like a dog. Yeah, so it can be both the ways. I'll just read it and you'll understand it. So yeah, the BCG matrix says that, Boston Consultancy says that the BCG matrix classifies an organization's division to present the relative market share. That is, what is the market share and what is the market's growth, means how good I am and how good the market is. The market divides, the matrix divides the business units, allocate each matrix to relative shares, then assess the prospect, which product is better, where should I invest, where should I remove it, and what are the strategies to follow. For example, if you can read this, this is what is important. If it's like a star, means over here, my market share is more, my percentage of share, my relative share is also more. Means it's good. You are in a good position. Means high investment is required because I want to still hold the position. But what if in the future the market reduces? Now market is very common. If you still have so much, you'll be like a cash cows, where it's better to, like the cash cows used as a star in problem child, we'll try to have a minimum investment here. If you still have more investment, you will be like a dog. But if you reduce your investment and put it here, where the market is good, but my share is less. But if my shares are also increasing more, I will be like a problem child. Like what says, I have two choices, like large investments to become like a star, or quick investments. The way. I hope guys you understood this chapter very well. Yeah, this is what I really wanted us to understand it. And yes, students, with these, we have completed the first topic, which is known as Introduction to Strategic Management. And I really wish you would have understood it super well. Okay, let's just take a break of 5 minutes and we'll be resuming with again an important topic, which is known as budgeting and control. Okay, see you. So, yes, students, I welcome you all back with the most important, and most important means the very easiest topic, and again, the important topic, which is known as budgeting and control. So, before I take up the topic, what is budgeting and control, we just all people, like we all have an idea of what's the meaning of budgeting and control. So, if I just normally go ahead, budgeting, which is something which everybody does, everybody, let's just leave like everybody does it, okay? No matter it's you, me, or like everybody, okay? So, which is something which is very, this budgeting and all stuff is something which is very common. So, what's the meaning of budgeting? Yeah. So, if I want to, let's say, go and purchase something, so future, I know, maybe I have to purchase something, or maybe I don't want to purchase something. So, some or the other way, what is my future's profit, what I expect, what are the sales I'm expecting it. So, for that, we make some forecast. Yeah. Let's say, for example, this is my current year. Yeah, let's just write it. Yeah. We'll just start analyzing things. Okay, let's say this is my current year. This is my current year. Let's say my current year is 2022. Understanding previous year. Let's say, yeah. So maybe this is my current year, and my year, let's say, my year ends in 31st 12 2022. So maybe over here I'll be having some actual figures. Considering these actual figures, maybe I'll consider it, and on 1st Jan 2023 I will make a budget for the whole year. I'll think like, okay, maybe the current year's profit can be increased by, let's say, 20 percentage, can be more. Whatever the cost you have made, maybe like 15 percentage less, you can make the cost to reduce. Last year's, let's say, the sales was, let's say, 8 lakh units. In the current year, I may expect 9 lakh units also. So all this stuff is what? We are making up a plan. Yes, we are making up a plan. All these things are what we are making up a plan. So that is known as budgeting. So what do you think on the day one when I made the budgets? My work is over. Yeah, ma'am, over. What do you do? Make the budget, sit idle. Over. My work was to make budget. I made my budget. That's all. Now. So students, we know just making the budget is not enough. People make the budget on day one. Yeah, I make the budget on day one. But eventually I have to see, I have to check. Yeah, I have to measure my budget also. Means what budget I made on the day one and what actually happened at the year end, I have to compare it. So this is what normally happens. For example, I thought like initially I made a budget on day one. On day one, I made a budget of, let's say, profit of profit of 2 lakh dollars. Okay. Eventually, actually what happened? Actually at the year end, my profit was dollar 1 lakh 20. Will I be happy or sad? So you'll say, ma'am, obviously we'll be sad now. Why will be sad? What I wanted and what actually happened was not good. Was not good. So I thought like, ma'am, it's 80,000 negative. Yeah. So what is this, guys? It is my adverse situation. So what I did I made it an adverse situation. So just by calculating this much, will we get marks? So it's a super no. So what we did, we just analyzed the day one's budget, compared it with the year ends, and got the difference. This difference is nothing other than known as variations. Once I get the variations, what should I do? After getting variations, I need to take a corrective actions. And that is known as nothing other than we need to have a control. I have to see, acha, what are the things which went wrong? I could not achieve that much of profit which I thought just because my cost in the current year was very high. Or maybe what I thought that this much percentage of sales I can make, but I was not able to make. Maybe because of COVID, maybe because of any stuff. So yes, students, now when we are at an APM, we are at a professional level. So just the marking of the financial terms will not be enough. We have to clearly interpret them. And that is what is the importance of budgeting and control. So on day one, when I definitely prepare a budget, I'll compare it by the year end with the actual performances. We need to find out, is there any gap? Is there any variation? Is there any difference between what you thought and what actually happened? If yes, go ahead, try to solve the problem so that in the next time you achieve whatever the targets you are putting it up. So yes, this is what is the introductory part of budgeting and control. So what are the things we are going to understand in that is, first of all, some common points of what is introduction to budgeting, then participation in budget setting, methods of budgeting, which is important, then some variances and some non-budgeting methods and some forecast. So yeah, students, without having any further delay, let's just start with some common knowledge. So over here, we have certain models. That is types of budgeting we are going to understand. What are the ways with which we do normally the budgeting? Yeah, how we have to make it budget. Then we have some cost, some traditional method, some modern method, which is known as absorption costing and activity-based costing. Then we have beyond budgeting, my personal favorite, standard costing and variance forecast. So, okay, students, now whenever we do budgeting, students, what we have to do for first, what we do, guys? Day one, ma'am, day one, year end. What are we doing, guys? We are comparing it. Yes, I have to compare it. I have to make a benchmark. I have to set a benchmark. Arey Baba, this is what I want. This is what I want. This is what my targets are. Yes. So this is what my targets are. So on the day one, I have to set certain benchmark, certain standards I have to set. Certain standards I have to set. Then I have to set the standards on day one. I have to compare it with the actual results. If there is any deviation, variances, get the corrective actions and try to solve the same. Yes, it is very important for the organization to understand what is better and which method they have to choose. Okay, because we know, for example, on day one, I thought like my company should make a sales of, let's say, a 2 lakh units. I told you after 3 months, COVID came and there was a lockdown for, let's say, 6 months. Oh my God. So basically, after 3 months or 6 months means basically after, like, by the year end, I could only make a sale of, let's say, 50K, 50,000 units. Yeah. So made a budget of this much and made a sale of this much. Can I scold my company? So you will say, no, ma'am, what will I do? If there is a change in the environment, yeah, if there is a change in the factors. So guys, we have to also please keep into consideration this stuff, which is known as, yeah, because it is important that the business environment is very complex, dynamic, and uncertain. So it's not just that. Once you set the budget, your work is over. You just raise the hands like I am done. No, it's not that. We need to revise on. We need to like have an eye on like whatever you thought, is it still achievable or is it something which is vague? Yeah, so you have to do that. Okay. Then students, what's the meaning of budget first? So budget is a plan, but which plan? I need to get a quantitative plan in the numerical plans for acquiring it properly over the period. Yeah. So why is budgeting important? Okay, if I just to see an overview, why is budgeting important? Okay, what is budget? To we got it is a quantitative plans. So what is the purpose of budgeting? Why am I going ahead with the budget? If I want something to go ahead with my future, I need to make a budget for future plannings. For example, I'm making a plan. Like, should I purchase an asset? It's my company, okay? Company. Should I purchase an tangible asset and block a lot of funds there, or should we lease it? So what are this? These are the plans. These are my budgets. My budget is very less, so I may not purchase it. Helps in planning what I need to do in the future, to look into the future aspects. Then if you read it, what is control? What is control? What helps in control? I have doing what budget, I'm comparing it with actual. And if there is any problem, what I have to do? I have to take the appropriate comparison. So it's just that we have to have a control. We have to have an eye on that. Super easy. Then it helps in communication also. That means, just imagine, who set the budget? I set or you set? So we know the hierarchy which I have explained you. This is the strategic level. Yeah. The tactical level and the operational level. So if I normally see the big plans have been made by whom? Oh, I'm so sorry. The big plans have been made by the strategic level. So let's say the top management imposes sub plans. Okay, Baba, your budget in the current year is to attain, let's say, 20% more profits. Okay, cool. So what it is, it's a formal way of communicating towards the lower management. So yeah, it helps in communication. But many a times, you know what happens, guys? Yeah, this is something which is very common, and eventually it happens in a lot of company. So there is a problem which is known as coordination. What's that coordination, you know? Many a times it's not only the strategic level who makes the plan. Even this technical level sometimes have to make the budgets. If they make the budget, let's say, you know what a technical level is? Yeah, it's the departmental heads. Yeah, for example, marketing department, production department, R&D department, HR department. Let's say the production department told, okay, ma'am, means they'll tell to the top management, huh? Top management. Okay, we'll tell you, okay, okay, Baba, my department can produce, we can give a budget of, let's say, 80,000 units per annum. This is what the departmental head told, okay, we can make 80,000 units. This is what the budget the production manager gave to top management. Okay. Now what happened, you know? The production manager knows that the normal capacity of the company is to produce, let's say, 1 lakh unit. Are means when the production department knows that the ground people can easily create 1 lakh units, then why just he gave 80K budgets to his top management? He gave 80K just for the purpose that it's easily achievable, right? 80. So definitely 1 lakh will be the units which my down people will achieve, and I will exceed the budgeted thing. So definitely I'll be in the position to get the bonus. So over here, the production department, just for its own bonus, he has set some word is known as, yeah. So what they set up, guys, they set up a budgetary slag. Guys, they set up what? They set up a budgetary slag. So as to their perspective, their motive is achieved at the stake of company. So they don't promote goal congruence, which they should. Yeah, okay. Then whatever we are making it, it's required for evaluation. So when I give APM's paper, I know only the financial terms are not important. We need to analyze and evaluate with the reasons. If there is a loss, if there is a gain, if there is a favorable adverse situation, why? Who is responsible? Who is responsible? Every stuff. If I got to know, okay, wow, 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 this time the production department did a good job. So we need to motivate them, we need to give them rewards. Happens. We need to give some people the authority. We need to give them some delegation also. So yeah, people will feel reality so that they will achieve the desired targets and work for their full 100%. So yeah, this is what the motives are. I hope you understood it. Yes, yes, yes. Now we move ahead towards the important topic, which is known as methods of budgeting. Okay, what are the alternative methods of budgeting? So we have top down approach, we have bottom up approach, yeah. Then we have flexible rolling IEB, ZBBs, ABZBs. Okay, I'll just, it's a revisionary part, so I'm not going into details. For in the classes, we have solved sums also, but I'll just try to explain you in the shorter span. Okay. So yeah, don't worry, just give me a minute. I'll drink water. Yeah, so chalo without any further delay. So it's a top-down approach and bottom-up approach, which says that the models are very clear. It says that who is going to set the budgets? How are the budgets going to be set? For example, if it is top-down approach, top means, yeah, the models of budgeting. Let's say over here there is top-down approach. Means the top management, the CEO will set the budgets for lower level men people. So they will set the budget. they'll set the budget and they will directly say, they will not ask, they will not request the lower management, क्योंकि see baba, this is the budget, we have made it. No, they will not ask, they will not help, they will not take any help of the ground level people also. What they'll do, you know, that is what, there is a name given for that type of budget. What they'll do, they will set the budget for the year and they will directly impose the budgets. They will directly impose the budgets on the down management people. So what they have to do, whatever they impose it, whatever they thought, the ground level people has to follow it. So that is the meaning of top down approach. For example, I'll just give you, when it is top down approach now, it is very easy for the management to make it, because there will be some one or two or four or five board of directors who will be sitting together and formulating some budgets and imposing them to the lower level management. But when I say, students, is it something which is very happy the ground level will feel? Maybe no. What the bottom level people will feel or the down level people will feel, the operational level, okay, they have never asked us like what is our capacity. Let's say the top management has imposed to manufacture, let's say 1.5 lakh units per annum, and no matter how hard these people work, their maximum capacity is 1 lakh units. So don't you think this budget is only over? Yeah. So to overcome this situation, they had another model which is known as bottom up approach. Bottom up approach means, let the ground level people, let the field workers, let the person who are actually working with the stuff have an opportunity to give their budgets. So, so my capacity is to produce 1 lakh units, like my ground. So they'll give a budget of 80,000 only so that they get profit. No, no, no. The bottom people will first of all prepare a budget. They will give that budgets to the middle level management, that is some departmental heads. The departmental heads will think, is the budget fine or is there any need of alteration and all? So if there is any changes, they will make the changes, they will send it to the top management. The top management will check, and if the top management is satisfied, only then that become the proper budget. So if you see, when it is top down, it has been directly imposed. It's very it's very not time consuming. It's like made within some hours. Yeah. But when it is bottom to up, bottom people will make, ask the middle management. Middle management will check. They will send to the top management. Top management will see, and then they'll finalize. So it's a long way. Okay, it's a long way. So yes, if you can read it, the top down and the bottom up over here. The top down budgeting over here is where the budgets are prepared centrally. Centrally means by the top management, usually by the senior management, and they are guys what they are. They are imposed. They are imposed on more junior people. Yes. But when it is bottom up, from down people, the junior managers make their budgets starting initially. Then it has been reviewed by the departmental head. And then after some negotiation, they are being finalized and given to the senior managers. Yes. So over here, there was a theory, like there are two people. Okay. Mac George has given up a theory about two employees who are working in the company, theory X and theory Y. So theory X says that there are certain people in the group who don't like to work, who are not engaged in the work. They are just concerned with, they get the salary, they get money, that's all. And there is somewhere else theory why people are as such who are very much motivated, who want to take the responsibility, who want to be involved in the decision making process. Okay. So if there are theory X like people who don't like work, don't want any responsibilities, only money motivates them, they will do whatever it's told. So for them, top down approach is fine. But when there are certain people who want to take the responsibility, want to be participative, for them, bottom up approach is more better. See, they have been, X is motivated by money. X is motivated by money. He is not at all interested. So for him, top down is fine. But Y has many factors. So for him, bottom up is better because he wants to be participative in that approach. So yeah, over here it's given. For X, when it is top down, it is very quick because we don't have to like ask two or three people. It's just like top management thought, it's done. But when it is the bottom up approach, it is time consuming, and the bottom people, just for their own bonus benefits, they may have some budgetary slags. They will, matlab like, they will like intentionally put up a low budget so that it is easily achievable. Yeah, maybe, may not be. Okay. So this is the first meaning, which is known as bottom up and top down. Up next, guys, we have fixed and flexible budget. At times, whenever there is a budget prepared just on one activity, it is known as fixed. Yeah. And sometimes it is as a situation where it is known as flexible also. For example, if I said you, there is company A, like B, okay? For example, no, company no. Let's say I've made a budget and this is what the actuals are. This is what the actual happening was. Let's say I made a budget of $1 lakh is a cost. And I thought like, I can make a number of units, let's say 10,000 units. Okay. Actually, I incurred a cost of, let's say, 1 lakh 20. Yeah, 1 lakh 20. And I had produced, let's say, 1500 units. So if I just compare this, I will feel like, ma'am, your cost was 1 lakh. Instead of that, you incurred 1 lakh 20, ma'am. It's an adverse cost, ma'am. Adverse cost, extra cost of 20K. But like this, we cannot do it today because it is not fixed, right? Because it is not fixed. So what we have to do, guys, we have to analyze what is your per unit cost. Over here, 1 lakh and 10,000. So per unit, I have a cost of $10. Actually, I prepared 1500 units at the rate of $10. So I would have got up a cost of how much? Actually, I would have got up a cost of how much? If you would have analyzed it, guys, you would have got up a cost of 15 lakhs. Yes. But instead of that, I just incurred 120. Sorry, 1 lakh 50. It's not that one, 15 lakhs. Okay. Are you getting it? Yeah. Am I getting it? Yeah. Yeah, wait. Yeah. Just try to analyze it over here. Actually, you made how many units? 1500 units at the rate of $10. So my total cost should have been 1 lakh 50. It should have been, should. So it's my revised cost. But what is my actual cost? Actual cost is only 120. So 120 and 150. So it's better that you reduce the cost. So that is the meaning of fixed and flexible costing. Okay. Okay. So there are certain advantages and disadvantages also. So when the budget is prepared for different number of units, we can take it as a variable budget. Okay. Okay. Flexible budget says that what are the benefits? So when it is flexible thing now, students, this provide a range of possible outcomes with variety of scenarios. So it's over here said that it's better when the costs are fixed. Yeah, such approach is better when which the cost are fixed, which do not vary. So at times it's better. Otherwise, the variable budgets are more better. What is the better way? What is the advantage of flexible budget? See, something which is fixed is not better. Why? Because at times you are ignoring a lot of stuff. But when it is flexible, you are concentrating on a lot of things. For example, it's easier to compare the actual because budgets can be compared easily. On the day one only, you will think like what is the cost per unit, and if there is any changes, you can book accordingly. But today, we know that there are a lot of expenditure in the world which is fixed, so it's difficult to find out. Okay, there is a cost. Yeah. Now, over here, students, we have a third topic which is known as incremental budgeting. What's the meaning of incremental budgeting? Students, incremental means the word increment means something which is growing ahead. Maybe in the positive way and the negative direction both. Means it can be incremental, it can be decremental, both the ways. Means because of the changes in the market. Let's say inflation rate, deflation rate, anything. If I'm adding something or if I'm deducting something from the normal scenario. Okay, so that is incremental budgeting. So when I say about the incremental budgeting today, a lot of companies are doing this only. So what they do, they see my previous year's closing balance here. So closing, they will see closing or the actual results they will see. Considering that for the next year, they will see here what's the inflation rate and all. So let's say the inflation rate is 3%. On these, they will add 3% figure and make the budgets. and they're done. They'll make the budget and then at the year end they'll compare it with the actual terms and then they will see. So that is known as incremental budget. It's just a simple addition and deletion. Okay, so if I'm adding it directly in incremental budget, is it always perfect? Guys, please, if you can learn it, keep in mind that incremental budget is better for stable business. I mean, like if the things are going very flow, with the flow, then if you do it, it's okay. But when it is unstable business, today it is 1 lakh units output sales. Tomorrow it can be 10 lakhs also, and day after tomorrow it can be 2 lakhs also. So when it is very unstable, na Baba, then incremental budgeting will not serve the purpose of budgeting only. So yeah, let's just read it. What is incremental budget? So incremental budget says the process starts with the previous year's budget or actual results, considering that we will add or less the incremental rates. You know what? The biggest disadvantages is what, Guys, what if the previous year's budget is wholly wrong? Oh my God. Don't you think the mistakes will be compounded? The mistakes will be added more and more and more? Yeah. So incremental amount are added and subtracted towards any change or maybe the inflation thing. Now this is important that this is an approach which is designed with, which has been developed in the stable business with a good cost of control. Yes. Advantages, it's just increment required, easy and quick. We can make it fast. But the biggest disadvantages is that budgets, yeah, what happened, for example, if something is mistake in the previous year only, yeah, so unnecessarily cost will remain if in the previous year's budgets are only inefficient. Maybe if I'm making it, maybe I'm hiding my inefficiencies behind the budget. Yeah, this is very common. Less chances of improvement. Yeah, not related to that. Okay, so there are certain questions. Yeah, we can do that also. Fine. With these students, I have completed like 3 methods of budgeting, which is top down, bottom up, flexible, fixed, and incremental budget. Incremental budget. But when we say incremental, just previous year they see, put on the percentage and that's all. Students, there are a lot of what we can say, there are a lot of problems in the incremental budget. Many a times, the biggest problem is, what if this is your first year? You don't have any stuff here. Then from where will you increase stuff? So for that purpose, we have a concept of ZBB, that is known as zero based budgeting. What's known as zero based budgeting? Means, guys, start every budget from zero. Start every budget from zero. Means don't take anything for the year of comparison. Like let everything be on the piece of paper. Let everything be blank. As if I am not at all concerned with what was there in the past. I just want to read the figures like plain reading. So like this type of budgeting is not very easy. It's not very easy. Like people will not find it very easily, this ZBBs. So what it happens over here is the zero-based budget attempts to overcome the weakness of incremental budget. Because if the previous year's budget are misstated, then definitely it will carry forward the misstated figures in the current year also. So over here, when we take zero-based budget, we don't consider anything in the previous year. So let my budgets be fresh and we'll go ahead with that. Yes. So my assumption is that let me start all the budgets from where? Okay, let me start all the budgets from. Okay, so it is the overcome the weakness of the incremental budget. So my assumption is let's start the budget from the next period from zero, everything from zero. Okay, the budget holder identifies which program to start. Means what, guys? Now this is important. Let's say in my company, there are lots of departments. HR department, production department, research and management, research and development, R&D, marketing, production, sales, or whatever it is. Do you think like for everybody should I start with ZBBs? So students, maybe for production, things are getting constant. Okay, you can use incremental budget. But the most important word is you have to identify which department to do ZBBs. Because to do zero-based budgeting, It's not easy, not viable also, not feasibly economically better. So you have to think, okay, in which area it's highly required to do the zero-based budgeting. Okay, so maybe if I got to know, okay, this area is maybe this number one area, number two. So give allocate a rank which is which is more priority to do the budgeting. And this normally happens where in this stuff, which is known as research and development, maybe advertisement for advertising, research stuff and all, where we don't understand. Maybe in the previous year we did or don't know, I don't know. So maybe in all this stuff, it's highly important to do the zero-based budgeting stuff. Yes, the budget holder over here prepares a decision package for each program. That is how the goal of the program is achieved, how they'll be getting the funds, what are the consequences if the department does not function well. Yeah. So who is going to make it, guys? The senior manager will think. And if I'm telling to you that normally in the companies, what happen, normally, see, this is all the departments. So normally company do, what? For all the other stuffs, they will do incremental budgeting. And for some activities, for some activities, now they will choose ZBBs. Means not for all activities, for some activities or for some departments. So that is known as partial ZBB. It's known as partial zero-based budgeting. Okay, we'll read it. Who manufactures it? Who makes it for the first? So the senior manager, usually a budgeting committee, decides which decision package to accept the criteria. Along with that, how much funds we have to allocate them based on the rankings of the decision package. So advantages is that we don't have anything in the previous year. So there will be no budgetary slack. There will be no comparison. It will be very clean sheet, right? And it is mostly applicable for advertising and research development stuff. Resource will be properly utilized. No budgetary slacks. Yes. Disadvantages, Aribaba. Even to learn it's so time consuming. So whenever if we want to make everything from zero, it will be too costly and too time consuming. And it will be different for everybody, different people. Like people may have a zero base, means they don't have anything to compare it. Maybe the people will be having a rigid thing, like maybe a sense of fear and all could be there. Yeah. Many organizations, I told you, this is what is common. Many organizations have partial ZBBs, not in full. Not all the departments will be doing the full ZBBs. Some departments doing ZBBs, some departments going ahead what, let's say, the normal incremental budget. Some departments going ahead with the top-down approach. Some may be going ahead with the rolling budgeting and so on. Yeah. So yeah, this is one of the big of the potential savings, and yeah, a different way from traditional thing. Yeah. So that is the meaning of ZBBs. I hope you understood it. Let's take a break of 2 minutes and we'll right back. Yes, students, up next we are going to start ahead with the rolling budget. Okay, so compared to other budgets, the methods, rolling budget is quite important. Okay, so what's the meaning of rolling budgets? Okay, for example, this is my previous budget. Okay, so like let's say the previous year. In the previous year, on 31st December 20x, let's say 22, actual scenario happened. Yeah, actually we got to know what happened. Considering this actual situation, if I consider these and if I make a budget on this date, let's say on 1st Jan 2023, if I make the budget not for the whole year, no, just for a smaller period, let's say 3 months. If I made the budget only for 3 months, considering the environmental changes and everything, okay, if I'm just preparing the budget only for a smaller period, not like a budget for the whole year, just for a smaller period, like so that I can update myself with whatever the changes are in the atmosphere and all. If I want to make the budget only for 3 months, so what can I do, guys? So over here, if I made a budget for 3 months, considering this actual stuff, this is something which is updated budget. Okay, I made a budget. Then on this date, guys, on this date, on like 3 months, so 31st March 20x23, I will check the budget and the actual stuff, compare the budgets and the actual and get the variances. So that quickly, I don't have to wait for the whole year to analyze whether the work has been done as good or bad or like whatever the stuff is. So we can take the corrective actions immediately without having a full like 1 year gone. So I can do it, I can compare it over here and I can now, sitting at this day, I can make a further budget for the next 3 months. So on this date, again, I'll make a budget. Again, on this date, that is on 30 June, what I'll do, I'll compare with the actual and budget. Again, on this date, make for 3 months and so on. That is known as rolling. Comparing the actual, making the budgets. Then on the date, comparing the budgets and the actual, again comparing the actual and making the budgets and the so on. So that if any changes in the market happens or the environmental or the external factor turns around, it's not something like we have not considered that because we are over here updating our budgets considering all the economical factors, environmental factors. Yeah. So yeah, without any further delay, let's just read what they have given up in the theory. I hope you're getting it. Yeah, it's pretty easy. Yeah, see, when it is rolling budgeting, a system of budgeting where the budget is continuously updated. That is over here. This is the horizon. Yeah, over here, day one. Over here for this much months. Comparing this, making it for 3 months. Comparing this, making it for 3 months. Comparing it and making it for 3 months. That's all. That way. Okay. So what they're doing? Budget horizon, typically 1 year, is kept constant by adding another quarter or whatever it is by end of each period and so on. So what happens used to be in the traditional phases now, traditionally used to make the day one budget for the whole year. And you don't need to, you were not like upgrading the things, not updating the things. So it's a waste. You should not do that way. So it's important for you to analyze the stuff also, right? You have to compare it. So day one I made by the year and I'll compare it. Arey Baba, that to year went na. That year went. It's waste for that year. Because I didn't took any corrective actions. I'll take the corrective actions for the next year. Arey Baba, for this year it's waste, right? So to make it constant, we use rolling budget. So traditionally, when we were making a budget, we were making a full advance, means for the full 1 year, we were making budget in advance, well in advance, but we were ignoring the factors such as the market, the external market, we were ignoring the changes, which resulted into outdatation of the budget. But yes, that limitations have been fulfilled by the rolling budget, which says that, yeah, it's an advantageous because what are we going to consider? We are going to consider the budget for the next 12 months, that too in the more realistic way, considering the changes in the market or the environment and the external changes also. Yes, easy. But you know, every now and then, every 1 month, every semi-annually, every quarterly to make the budgets to compare. Baba, it's not so easy. It's not so easy. It's not like just one day work. No, no, no. It is time consuming and it is sometimes, yeah, see, the biggest answer which you have to write it. When we are using the rolling budgets now, this budget is useful mostly when the market is or the company is unstable. Means when the situation is very stable, incremental budget is there. But if what if the market goes on changing, ma'am? If it is going to change, then what to do? When it is unstable, then you can do the rolling budget. Consider it, make it for 3 months. Consider it, make it for 3 months, and go on. So yes, if the market is stable, it is not necessary in the stable market. So when the market is unstable, then this type of budget is helpful. But like this time, budgeting can be bad. Why? The people will hide their inefficiencies, maybe to just make a inefficiency. So just to hide, they'll make it. Okay. So there's one question in the notes, you'll be having it. So the company is having some using some rolling budgets also, and they had some sales figure. So they have thought of on the day one, this quarter two, quarter three, everyone. And this was my actual stuff which I can make it as a budget. Now what happened on day one? I made a budget of how much? Budget of 1,25,750 as my sales for 3 months. Okay. What happened in the actually for the quarter, the sales was this 123,450. So you will say, okay, ma'am, it's reduced. Okay, now this becomes the base. On this base, I will add it something for the second quarter, third quarter, and fourth quarter. That way. So they have told the adverse variance. Yeah, there is adverse. The adverse variance is fully explained, and they want that the budget committee is thinking like there is a sales growth of how much, guys? Of 3% per quarter. So on that, why? Because today it is not that way, ma'am. If it is only one product, it's fine. It's fine. But what if I say you, in my company, I manufacture pen also. I manufacture marker also. Yeah. Let's say the direct materials cost of pen is $5. Marker's cost is $10. The direct labor's cost is $1 and $2. So my total cost turns around to be 6 and 12. Normally, the selling price in the market of pen is let's say 10 and the marker's pen is let's say 20. Okay, this is what it is, a normal selling price. Over here, as per other cost, mistake of my cost, as per units, by mistake, I put the overheads and I got the overheads which should have been more for marker as compared to pen, but I equally divided it at the rate of let's say 5 and 5. Oh my god. So my cost turned around to be 11 and 17. I had a profit margin of let's say 2 rupees and 2 rupees. So maybe over here my cost will be 13. Cost means my selling price, my company's selling price will be 30 and over here I can sell it 19. So if you see, this is a market selling price and this is my price. If this is my market selling price, this is my price. So if you see marker, in the market it has been sold at 20, I can sell it at 19. People will purchase so much of markers from me because they get it in a cheap price. But in the long run, it is wrong position because the mistake is because of this stuff. There is a mistake because of all this stuff which is known as overheads of 5 and 5, which is just bifurcated on a basis of 50-50 percentage. So now in the traditional basis, they were doing it by number of units. Let's say I was manufacturing 50,000 pens, 50,000 markers. So equal, I just bifurcated it. So now students, traditional method was very bad, so it was over. So that traditional method was known as absorption costing. I'll book one more word for you guys over here. This absorption costing was okayish and very prior back. So now there is a concept which is altogether a new stuff. So we have to come up ahead with a lot of things to be known. Okay, before I go ahead, just students think. If I am making marker, if I'm selling it now in 19, lot of people will purchase. My sales will increase for sure. But what if I am selling my pen at 13, but normally in the market I can get it at 10? Baba, nobody will purchase. Nobody will purchase. So you will be out of the market. So like this stuff need not be done. So that's the reason we have the ABC costing, means activity based budgeting follows the principle of the activity. Yes, how to decide the selling price and all. Okay. To learn that activity, we have ABC analysis, that is known as activity based costing. So when I say activity based costing, what it is? So we normally have to find out the cost of overheads. Students, and this ABC is applicable. Please keep in care. Where applicable, where we have more than one product. More than one product. If it's more than one product, only then I have to bifurcate between products. For example, actually I'm getting a pen's cost more, so it's better na, to stop the production of pen and just concentrate on marker so that you will earn more. Yeah, it can be, it can be. So cost of overheads. For example, if it's product 1 and product 2, maybe I'll be having direct material, direct labor, direct overheads cost will be there for all the stuff. Yeah. So what I get, guys, after doing so, I get the prime cost. I get the prime cost. That will always be same. Okay, there is no confusion. But when I book the overheads cost, now students, overheads cost, initially they were dividing it between the number of units. Now number of units is not applicable. Then what it is applicable? Yes, guys. Then we have to divide it by what? By the level of activities. Activities. What's that level of activities? Let's say there are 2-3 levels of activity in the company. Let's say I'm telling the level of activities are, let's say, machining activity, machinery activity, let's say setup activity, let's say inspection activity. Okay, but beyond going that, let me give you one simple example. For example, machine A, let's not just machine A, product 1 and product 2. Random example, product A, product 1 and product 2. Let's say it's a vehicles, it's a vehicles type thing. Okay, two vehicles. The petroleum expenditure in the company is, let's say, $50,000. So I thought, like, ma'am, I'll divide it between two for 25. But they told, okay, see the level of activity. I got to know that they were using how much petrol? I was using, product 1 is using, let's say, 250 liters, and product B is using 280 liters. So don't you think to bifurcate equally is not proper when I have this stuff? Yes. So what I can do, let's say the cost is, let's say, $50,000, and the total usage is, let's say, dollar no liters, 250 and 280, it comes about to 330. I think 250 plus 280, is it 300, 530? Yeah, it's 530 liters. So can I get OAR? Yeah, overheads activity rate. Overheads, like on the value rate. So what's the rate? We can do 50K divided it by 530. Am I getting something around 94.33? Yes, now it's 94.33. 94.33. So now this 94.33 needs to be multiplied with this and this. That is 94.33 into 250 liters comes about to be over here 23,582 for my unit 1, and for unit 2 it needs to be, I hope you guys are getting it, yes or no? I hope you guys are getting it, yeah? I'm not going like the way, yeah? So 94.33 into 280. 94.33 into 280. Are you getting around 26? Yeah, it's around 26,412. So if I take up the total of this and this and this, I'll get 50. So 50 need not be bifurcated equally between both the stuffs when we have certain activities attached to them. Yep. So that is what we have did it with the question. And the class I have completed a lot of questions. So now students, we will be understanding a lot of questions, and then we'll be going ahead with another concept which is known as, if you can see here, we have certain concepts of variances. So all those variances and all also we need to go ahead with that. Okay. So students, without having any further delay, I'll just close it. I'll not save it also. But we have a very pretty question for that. And without any further delay, I would like to just explain you the question. Please students, try to understand the question. It is important, huh? Important in sense, uh, maybe can be tested in your paper also, like that way. Just give me a minute. I'm just opening it up. Yeah, just a minute, huh? Yeah. Wait a second, students. I think the word is visible. I have just tried opening it. Yeah. There are certain questions from your notes, obviously. I think it's not visible. Yeah. Hmm. Some questions are there. So I'm considering the important stuff only. Now we can do these questions. Okay. Okay. Yeah. So if you want, I can like just make it over here. There is some questions, and if you want, I can just show it in that. Just a minute, so that things will be easily available for you, so that you understand it in a better way. I'll just open it in the chat, so I can write a lot of stuff. Okay. Yeah. Let us do with one question, which is there for your paper. Or you can get it in your notes also. Yeah. I have opened up the thing. Okay. Yeah. This is a question which is there in your notes. I've just copied it and pasted it over here so it is easily available. Okay, a company is having the following budget and the actual information from the department. So basically they have given two types. This is from the concept of fixed and flexible situation. Okay, fixed and flexible. We'll try to analyze it. Just trying to understand it. The budgets are given. The level of activity is 1000 budgets. Okay, I am having this much of outputs and this is my cost. Can you tell me what is the cost per unit of your budgeted stuff? So I'll do ma'am 20,000 divided by 1000. Am I getting nearly around $20 per unit? Yeah, ma'am, it's $20 per unit. Okay. Now this is your actual cost. So if I see this, what I'll feel, guys, okay, ma'am, your budgeted cost was 20,000, but you actually incurred 23,000. Ma'am, it's very bad. It's worst. Ma'am, it's variance. Ma'am, its variance is adverse of 3,000. But like these decisions, you cannot take until unless you go ahead. How? For example, I got this cost per unit and I got to know in the current year, I didn't made only 1000 units. No, I made 1200 units. So what should be my revised standard? Revised standard needs to be for one unit if I'm taking up a cost of $20, then for 1200 units, it needs to be how much? So can I multiply 1200 into 20, which comes around to be $24,000? So your cost would have been 24K, but I only incurred 23K. That means I have not done adverse work. I have done a favorable work of $1,000. Yes, this is what the first question tells us about. Okay, I'm just deleting it off. And I know this is easy. This is what we all know, the stuffs. Okay, there was another question if you remember. There was another question also, which we did it like about some portion. Now I'll be trying to show you the stuff which is easy, but eventually you should know how to solve this question. Okay, so I'll not be writing the stuffs on and on. You will understand it if I just show you. Okay, maybe if you're fine, I can show you. Yeah, yeah. Just try to please recollect it. Okay. Okay, there is a concept which is there in your paper, or I can say in your notes also. I've just opened it up. Maybe you can see it. Yeah, there is a company who is government funded hospital. Okay, of the company. Relevant cost for the year ended on 31st December is given. So staff cost was given salary. My budgeted cost was given. My actual cost was given. I thought my budgeted cost for doctors is 1 lakh and my actual cost is 105. So I thought like, ma'am, my actual cost is more, I feel. It's not good. Yeah, maybe it's more. Maybe for nurses, I feel my actual cost is less. Okay, so they have given certain budgeted doctors numbers and actual numbers. Okay, that is fine. See, we are at a quick revisionary series. I'm not solving the questions for you guys, okay? For that, we have to do it in the normal classes. Yeah. So, students, over here, the budgeted cost for the year. Oh, yeah. I'm so sorry. The budgeted cost for 20,000 patients is given. How many total cost was there for 20,000 patients? Okay, for my 20,000 patients, these are my normal cost. These are my budgeted cost. Some variable and some fixed cost. Like other stuff cost of dollar 14 lakh 40 was variable. Catering cost, cleaning cost, other cost, depreciation, etc. And if you can see, students, this is the budgeted thing which I have made it for my 20,000 patients, only 20,000 patients. Okay. And this may be the situation. Somewhere we have variable cost, somewhere we have fixed cost. But actually, what happened? Actually, there were not 20K patients. The patients were more. The patients were 23,750. If I just join in like this, can you tell me? Yeah. If I just show you, can you tell me what will be the scenario? What will be the scenario for other people? Like I'm just opening it up. Yeah. Tell me. This expenditure is for my 20K patients. And this is what they have made it. Actually, these are my revised standard. Okay. So actually the patients were 23,750. Am I concerned with anything? Will it change? So yeah, ma'am, we know that anything which is variable is going to change. For example, if it's a catering, other staff cost, which is 14 lakh 40, 100% variable. That means, oh my God, for 20K patients, I am having 1440 as a cost. Then for 23,750, how much will be the cost? Get it and tell me. Yes, students, tell me. So what will be the cost? Am I getting something around 171? Yeah. So please do it. 23,750 into 14400 divided by 20. Are you getting something around variable cost of 17,10,000? Yes. Okay. Then guys, if you check the catering cost. Yeah, this is your first answer. I think it's clear. Now what happened? I'm just deleting these things for your variable stuff only. Okay. Do it for second. Catering cost of 2 lakhs. 70% is variable, 30% is fixed. 30% is fixed irrespective of how many patients you have. So 30% is fixed means 2 lakhs 30 percentage comes to 60K is fixed. So in fixed we have 60,000. In variable we have how much? So minus 60K. So it's for 20K patients, I am having a cost of let's say 1 lakh 40. So for 23,750, how much? Do it and give me the answer. So 140 into 23,750 divided it by 20K. Is it coming nearly around 166,250? Yes. Yes? Yeah. So we have to calculate that way. Then when it is catering cost, what it is? Catering cost, the total. Okay, if I just see the total, I'll get some X amount. Okay. If I make up the total, if I make up the total column also over here, my total was 1 lakh 71. Okay, yeah. And over here, my total turned around to be, please do in the calculus. Are you getting nearly around 22,6250? Yeah, 22,6250. Okay. Third, about the cleaning, 65% is fixed. So 80,000 into 65%, which is fixed, comes around to be 52,000. Yeah, fixed is 52,000. And variable is 80,000. Okay. Into 35%. But how much it is? 80,000 into 35%. It is 28,000. But for whom, guys? For whom? For 20,000 patients. Yeah. So 20,000 patients. It was the cost of 28,000 cost. But I am having 23,750 patients. So what is the cost? Into 23,750 divided by 20K. Are you getting nearly around 33,250? Yes. 33,250. So what is the total? If you make up the total, you get around 85 250. Yes, 85 250. Agree? Yeah, students. So this is the way we normally solve this. Okay, I'm just deleting it. So 85 250. Then it is the cost, other operating cost. 70% is fixed of 12 lakhs. Oh, 12 lakhs. 70% is fixed. Is it 8 lakhs 40 which is fixed? Yeah, 840 is fixed. 840 is fixed. So what is variable, ma'am? 360. Okay. So out of that, 840 is fixed. 840 is fixed. Variable is 360 for 20,000 patients. For 23,750, how much? Please divide it and get it like cross multiplication. I'm getting nearly 42,750. Yeah, 42,750. So if you take up the total, you definitely get something which is more than that. That is 126,750. I want you guys to do work. I to know all the stuff. Yeah. So over here it comes around to be 126,750. And when depreciation is fixed, it is fixed 80k. So no doubt in that. So 80k. So here also it's 80k. So over here now we just take up the total. Yeah, this is what your revised standard. Now this revised standard is to be measured. Is to be measured with whom? Now if you see this, guys, this revised standard is to be measured with the actual stuff. So what's the actual scenario? This is your revised standard. What you got it? Yeah, the figures which I got it. And this is your actual which will be given in the question. So if I'm getting anything better, it's favorable. Otherwise, it's worse. For example, over here, other staff cost, my actual cost was 15 lakhs, but my revised cost was 17. So yeah, it's favorable. So on, students, this is the way you have to write the answers. I hope you guys getting it. Super easy. Okay, now up next we have a question which is known as, yeah, I'll just show you the question which is again important. Yeah, this is what I just did it and show you na 3 percentage we are adding it, yeah, on the quarter rolling budgets 3%, 3%, 3% we were adding it. Okay, so we have a question which is known as about ABC analysis. Yes, students, this is your question for your ABC product, activity based costing. So there is a company, as I told you, when it is activity based costing now, students, it is never like one product, it is more than one product, it is always more than one product. I'm just briefing you out the question. You may be knowing this, you would have did this. So the company is having three products, product X, Y and Z. So these are some labor hours and these are some machine hours. Okay, okay, material per unit. So if you can see this, there is some cost which is incurred for the material, isn't it? Like what is the total amount of cost which they have incurred it and so on. So yeah, material per unit and units. Okay. Using broadly the same production method for each, a convention absorption costing was used and absorption costing was prior. Now we want to change it to what? Now we want to change it to ABC system. Okay, cool, we can do it. So some details of these three products ABC are also given. Okay. So if I see this, I require half hour, 1.5 hours for machining for making 750 units. So I require this much total hours. If you take the total hours of machine, you get 23,375, which is already given in the question. So we can check it and cross verify it. The question has been shown like the direct labor hour is $6 per hour. So what is your labor hours cost? Okay, so it's half hour and per hour is 6. So can I get 3 per hour? Yeah, 3, 9 and 6. Consequently, which is there in your question. So 3, 1.5 means 9, 1 means 6. So over here, if you see 3, 9 and 6, students, this is there already in the question it is given. It is already provided in the question. So we have to find out. Then material, if you see 20, 12 and 25, it is also given in the question. Are you getting around nearly 20, 12 and 25? Yeah. When you see the overheads, the machinery is also given 1.5, 1 and 3. So it's a per hour price. Even that is given in the question. If you see, the rate per hour is 28. So if it's 1.5, it's 42, 28 and 84. So as per the question, my total hours are 65, 49 and 115, which is already given in the question. Now what they have asked us, See, Baba, now the further production is this much overheads, which is 65 for 500. So now they have given, if you want to calculate this stuff, please find out the production overheads. Okay, now I can find it out, the ABC costing. Now I can find it out, the ABC costing. Okay. Without having any further delay, yeah, let's understand how to solve this question. Yeah, just a minute, huh? Just give me a minute. Yeah, I have just opened it up. I have just tried to copy it up. Okay, I'll just paste it up over here for us. Okay, and these are certain activities which they have given us in the question. Mhm. So students, I have made this question for us. Yeah, we'll do it. Yeah. So if you see this, yeah, over here it's this question that is shown like further analysis shows that, yeah, this is the production overheads. So this is the total cost. Now see, when it is direct material, it is fixed. When it is direct labor, it is fixed. So when I say the direct material, direct labor, everything is fixed. But when it is overheads, now students, when it is overheads, it's not fixed. It has to be as per what, guys? It has to be as per, yes, perfect. It has to be as per the activity based. So what are the activities? In the question, they have given four types of activities. So the total cost is 654,500 and the activities are setup cost, machine cost, material handling and inspection cost. And these are certain drivers. So what they have given us, if my total cost is 654,500 and these are the percentages of cost, can you bifurcate the cost? I want to bifurcate the cost between the activities. So if you see 65 for 500 into 35 percentage, I get a setup cost of 22,0, also at 22,90,075. Yes. I get a cost, okay, I get a cost of related machinery at the rate of 130,900. Yeah, please do it. You get a material handling cost of 98,175. Yes. You get an inspection cost of 193. Please do it. 196,350. Yeah. So these are the cost. These are the cost. Yes, students. Now these are the total cost which is being bifurcated. Yeah. Now these total cost you have to bifurcate between the activities. So these are the activities which is given in the question, like for number of setups. What is my total cost for setups? I just got it right now. My total cost for setups was how much? If you see in the previous time, my setup cost was 220, 229,075. So my cost was 229,075. Same way for material handling, the question they have given was 98,175. Yeah, 98,175, and the total cost for inspection which was given was 196,350. So if I divide this total cost, like cost divided by number of setups and all about this, so I get OAR, that is the rates, the individual rates, cost rates. So if I just divide it, I'll get that stuff and then I can multiply it with the numbers. And this is the way how the question is to be done. I really hope you guys are getting it. Yeah. So this is the way we do it and we compare it with the individual products. Yeah. So if you do that, guys, yeah, if you do that, we get this amount, we get this answer. Yeah, we get this stuff, if you can see. Yeah, this is the total cost, 290, 139, everything. And these are the total setups, 670 setups, this many hours, 120 moments. These are the OAR, which is given in the situation. So now, either I can multiply these number of setups with the total number of setups, which is there individually per unit, I can do it. So yeah, in the question, it is given that number of setups and all are how much. And then I can consider it and find out the total value. Okay, that is if I give you a situation, you will definitely find it out that way. Wait a minute, I'll just show you the question also. Over here, if this is given in the question, yeah, if this is provided to you in the question, yeah, oh, so sorry. Yeah, students, these are the number of setups which is given, number of setups. Total setups are 670. So total, what is the cost of setup? Per setup is 341. Per setup is 341. Can you tell me how many setups are there for product X? So you can multiply 75 with 341. Do 75 with 341. Am I getting 25575 something around that? Yes, guys. So every time I do like that, I will get the total units. I'll get the total units. Similarly, if I calculate that way, every stuff means this needs to be multiplied with this number, this and this. Material movement, I have to multiply 12 with this material handling cost of 818 every time for different products and so on. The inspection of 150, 180 and that way with this amount of 196. So students, I get this amount, I get this figure. So this is what I get it if I multiply each and every stuff. So this is what I get it, the total cost of XYZ, the setup cost, the material handling, inspection and this. So this is my total cost based on the activities which they have provided us to do. I hope you guys are getting it. Yeah, I'm not going ahead with each and every stuff. So you know this all standards, you know all this value. Then if I divide it with the number of units, I get production per unit. Then I can add it, this direct material, direct labor and production cost per unit to get the total cost. Getting it? Then I have to just add it with the total cost so that I can get the cost per unit. And this is what they have added us and shown us. So we can find ABC like the direct material, direct labor and all is given in the question. And right now what I got, the production cost of 94.95, 79 and 69. I need to add it and get the total cost. And this is what the cost was given in the question. Then guys, I can compare it. What cost I got is more, and this is less. So accordingly, we have to make up plans. I hope you guys are getting it. Superb. Yes. Clear? Okay. If not, please check on this video. Yeah, you will get to know first. Always try to find out what are the activities. Get the cost drivers. What are the drivers? Then find the OIR, like activities ratios, every point, like the situations. Okay. Then you can multiply it with the activities and get the per unit value. That's all. That's all. Yeah, I hope it's clear. Yeah, so we have covered a lot of topics till here. Yeah. So now we are in a situation like I have shown you now. This is the way we do it. Okay. First, find the amount of activities. Then find the cost drivers. Then overhead absorption rate. Allocate it to activities and then find out cost per unit. I hope it's clear. Yes. Okay. Next. Now this is also important. Now what is the meaning of variance? Say for example, day 1 I made a budget of let's say 2 lakhs. Actual happened to be 2.5 lakhs. So you'll say, ma'am, let's say it's an expenditure. So you say, ma'am, it's an 0.5 lakhs is expenditure is more, so it's just adverse, bad. So this is easy now to compare it. But just to compare the actual and the standard prices and the quantity isn't enough. You have to find it out like why. Who is going to be responsible? I need to interpret the variances. If there is a change, then why it is a change? Who is responsible? Who needs to be penalized? Everything that way. Okay, for that now guys, we need to do the variance investigation also to improve the performances about the actual, and actual is compared with the standard. Yeah. And if there is any difference between actual and standard, there is a variance. So if you understand this, the reason for getting the variances investigation is why did it occur? Is it increase or decrease? How? Who is responsible? For that, we have to do the investigation. How will I do investigation? I will start by comparing the actual performances with the budgeted ones. I will compare it. I will analyze the variations. I'll get the difference. I'll understand what is the root cause. Why? Why is the difference? I'll understand, Ocha, why is it different? I will get the answer. I'll get the understanding. Okay, in the current year, the profits are less because I am not able to make so much of sales, maybe because of COVID, or maybe the expenditure is more. Then I'll try to take the corrective actions and try to implement it for the next period. And this variance investigation is going to go on and on and on. Yes, cool. Yes, I hope you guys are getting it. Yes. So now, students, you need to punish if there is any difference only to the person who is accountable. Only to the person who is accountable. So, guys, over here, we have a concept which is known as the variance reporting. We have a concept which is known as variance reporting, which is again very important from the perspective as it is covering up a very great intelligence. Okay, so yeah, I will not waste more of time and yeah, we will directly jump ahead towards the variance reporting and I hope you guys are getting it. Yeah, so I'll be doing it ahead. Yeah, let me just show you the Excel. Yeah, okay. So students, what is the meaning of variance reporting? For example, if I'm saying you that in the company, yeah, the profit is given. The profit is budgeted profit is, let's say, on day one. Okay, on day one. Okay, just try to analyze it. Okay, we will not take more time, but we will definitely learn a lot of beautiful concepts for sure. For sure. Okay, let's see what happened on day one, guys. On day one, I made a budget of, let's say, profit of 1 lakh. But eventually by the year end, it turns around to be 150. Oh my God, it's good now. So 50,000 is more favorable. So 50,000 finding the figure is very easy. We need to know why. I have to do what? I have to do the analysis. I have to do the analysis. So how will I do the analysis, guys? For that I have to find out if my profit is more, maybe my cost will be less, either my sales will be more. It can be both the ways. It can be either the cost is less, either the revenue is more. So for that, if I'm talking to you about the cost, what are the elements of cost? Maybe it could be a manipulation of raw material, labor, variable overheads, or fixed overheads. So moving ahead to the most crucial element, which is known as raw material. Guys, I have tried to make it very easy. You know, there is a concept which is known as variances. Means what you thought the raw material you will require to manufacture on day one, it's not compulsory that much only raw material you require by the year end also. Yeah, maybe what you thought catch at this much price I will get the raw material. Actually, it can be different. For example, just try to understand. This is the way I make it. So for raw material, who are the parties who are involved? So you'll say, ma'am, the production department will order how much units they want, and the production departments inside there is a purchase department who will quote the price for the raw material. Okay, just try to understand. If I say the standard unit, for 1 unit I required, let's say, 3 kgs of raw material. This is what I normally do. Yeah, this is what I normally do. I take 3 kgs to manufacture one unit of raw material. The price is 2 and the cost I can incur is 6. But what actually happened? Actually, I manufactured 5 units by incurring how much? 18 kgs I required at the rate of 2 and my cost was 36. Okay. So if I compare, your cost should be 6, but now it is 36, it's wrong. Ma'am, you will say, ma'am, it is for 1 unit and it is for 5 units. So make a revised standard for 5 units. Okay, so I'll make a revised standard for 5 units. Okay, I'll make a revised standard for 5 units. Okay, I'll just make a revised standard for 5 units. Okay, let's make a revised standard for 5 units. So if it's a unit for 5 units, can you tell me how much quantity required? Let's say for one unit, what you thought initially, you required 3 kgs. So for 5 units, how much you required? So you will say, okay, ma'am, I required 15 kgs. Yeah. What price? Whatever you thought on day one, 2. So this is the cost you should have booked for. You should have booked the cost for 30. Whereas, actually, what is the cost that is incurred, guys? Okay. So when you see, actually the cost which is incurred is not 30. Oh, then what it is? So I thought of like it needs to be 30, but eventually if it is 36, ma'am, it's a negative variance of 6. So whom to scold? Whom to scold? Whom to scold for -6? So will you scold the production department? So who is production department? Production department is there just to say how much kgs I want. And when it's purchase department says if there is any change in the price. So over here, there is no problem in price. Price is same. But instead of getting 15 kgs, you had 18 kgs. So how much kg extra you had? Oh my god, 3 kgs. So actual kgs are 18. Revised was 15. So you had an extra kg of how much? So yeah, I had an extra variable of extra 3 kgs. What is the price, ma'am? The price was 2 only. So what is the defect? What is the advance? Adverse ratio of 6. Easy. So this is what we normally do it. Okay. This is your first thing, which is known as material usage variance, where because of the difference of the usage, you have certain changes. Agreed? Yeah. That is the first point, which is known as material usage variance. Up next, we have a second point, which is based on the prices. For example, I am talking about the purchase department. I want to scold the purchase department. Why? Because 1 unit you have incurred 3 kgs you wanted at the rate of 2 and 6 is what you have planned on day 1. But actually what happened about 5 units, you required 15 kgs at the rate of 2.5. So your cost was 37.5. Forget about actual. Think like on the day when if you would have thought for 5 units, what would have been the price? Okay. Maybe ma'am, you will say ma'am the price would have been, let's say for 1 unit it is 3 kgs. For 5 units it needs to be 15 kgs at the price of 2. So maybe my cost would have been 30 only. So when my cost would have been 30 only, but actually if it is 37.5, ma'am, it's a loss of how much? So yeah, you can say, ma'am, it's a loss of 7.5 for sure. So who is responsible? Will you scold the production department? So production department will say, I have purchased 15 only at 15 only. But it is just because of the increase in the price. How much increase in the price? Actual price is 2.5. I made a budget of 2, so you have increased your price by how much? It's a variance of 0.5. And I purchased 15 kgs, so then I get an adverse variance of 7.5. So this is what is known as price variance. So guys, we have two types of variance. Material variance, if I used more material, I'll scold my production department. If I have used less material, it's good, it's favorable. But if I have paid more money, you have to scold to your purchase department. But students, it can happen like both the situations can happen together. Like means, just imagine, you required 3 kg for 1 unit, 2 and 6. And actually for 5 units, how much I required? For 5 units, I required 18 kgs at the rate of 2.5 and 45. This is something at the year end you understand. Please make a revised standards for budget for 5 units considering this. So what is your quantity? For 1 unit if it is 3, for 5 it is 15, price of 2 and your cost needs to be 13. See guys, I'm making it constant so it is easy. So is it good? So I really wanted a cost of 30 but it eventually went to 45. Oh my god. Ma'am, so extra cost of 15. Yeah. So it's a loss of 15. It's a variable loss of 15. So if you see, it's a variance of how much? 30 minus 15. It's an adverse variance. It's an adverse. It's not good variance. It's a negative variance of 15, right? So to whom you will shout? So you'll say, okay, ma'am, I'll shout to the price also, because instead of 2, he purchased costly, more 0.5 he purchased. Along with that, you have to shout to your quantity also, because 15 you wanted and you purchased extra 3 kgs. So for 3 kgs, whom I'll shout? The production department, and for 0.5, I'll shout to purchase department. Yeah, so if you understand this, for material usage production department, how much will you shout them? How much will you shout them? So now when you see, for 3 kgs, you will shout at what price? So if I add 3 kgs difference into 2.5, your production manager will be angry. He'll say, why are you charging 2.5 to me? I was not the person to pay 2.5. I was knowing it at 2. So give me 2 only. Okay. So now for production department, it is 3 kgs into 2 rupees, which is minus 6. But what about this price? Instead of 2.5, instead of 2, it was 2.5. So 0.5 is extra. How much kgs you purchased? actually I purchased 18 kgs, so this is also negative. So minus 9 and minus 6 comes up to be 15 minus 50. So this is known as your cost variances. I hope you guys are getting it, the cost variances. Similarly, guys, take a chill pill. We have understood the cost variance for material. So what's the meaning of material variance? See, what you thought on day one and what actually occurred. If it is different, you have a difference. So considering what it is on the day one, create a revised standard for the number actual usage. So on actual units. Then compare your revised standard with the actual terms and get the variances. Okay, this can be easily done. But for example, if you want to go more ahead, we have some labor variances also. We have some planning and operating variances also, which again turns around to be the most important topic, which I hope we can cover it. Maybe tomorrow we can continue with the next topic. We can continue it maybe tomorrow. So yeah, for the day, if you understood this many topics also, it's pretty easy, okay? It's pretty cool. And I'll just save it for sure. Students, I really want you all to understand the topics, okay? And yes, up for the next, we'll be learning a lot of concepts ahead. So students, I'm requesting you all, okay, if you have any doubts, please do message me, and yeah, we'll be there for sure, solving any sort of queries. Okay, so yeah, thank you, take care, bye bye.